Well, good afternoon or good evening or good morning or wherever you are. This is James coming to you from Dividend Stock Talk. It is 8:59 Thursday, March 23rd, 2017. We got our options expiring tomorrow, and as you can see, we're on the fourth Friday of the month. So no, they are not monthly options. They are just weekly options. So that's a good thing. And let's just jump on in and see what we're looking at this week. And here we go. All right. If you're on our mailing list, this is what you're going to see. Mailed to you every Monday morning at 6 a.m. It allows you to do all your trades for the week. Let's take a quick look at what we're looking at for this week. Oh, those are, let's look at those. Number one, LOAN. Look at that. 10-cent dividend. The yield is 6.4. Wow, that's nice. Average movement is 5% a day. That's a nice move. All right, 100% of the time over the last 10 years. Over the last 10 periods, I should say, this thing has reached our goals each and every time. That's great. PLCE, that one's nice. Okay, not too good here. But hey, that's not what we're looking at the moment. We're looking at the dividend capturing. This is just for the dividend capturing. So don't pay attention to these columns. They're not as important as this column is right here, because this is the one we're looking at the moment. WGL, that's not bad. ROP, WIRE, CSCO. I think I actually got some CSCO. Kroger, I think I got some of that one too. DGX, I think I got some of that. Definitely got some of MasterCard. That's a dividend king. That's like a no-brainer. Cisco, another no-brainer. You want to get into that one also. Let's take a look at some weekly options. Ooh, well, why not? Let's take a look at this. What do we got here? Kroger, BMY, MA, MasterCard. Now, if you look at MasterCard, it's rather interesting. I always buy MasterCard only because she has ones all the way down the board. Hey, look. Never seen MasterCard come in with less than a 1. Never. Now, don't get me wrong. I don't want to own MasterCard. I just want to collect their 22-cent dividend. I mean, look at the yield on it. 0.78. It's terrible. However, if I know they're going to give me a quick 22 cents the very first day, why not? I'll jump in, buy a bunch, and get back out again. Other than that, I don't want to be bothered. Okay. Let's slide down here and take a look at the weekly options. I love weekly options. Yeah, here we got the weekly options. MPEL, SLW, RIG, KGC, UNH. Some of these I don't even know. BMY, COF, Costco, Monsanto, JP Morgan, Amazon. Okay, those aren't bad. They all have options. Love that. Oh, yeah, silly me, because they are weekly options, of course. And let's see which ones make my list here. BMY, MO, JPM, and AZN. All right, not bad. I can look at that one. Look at AZN, like a 6.29% yield. That's pretty good on a $30 stock. And look, they got a 1-year projection of hitting 33. She closed at 30. And they're projecting it to hit 33 within a year. Okay, that's not bad. That's like a 10% gain right there. And you're getting a 6.29% yield. Oh, love it. Look at the dividend. 95 cents. Gotta love it. All right, let's get out of here. Jump into our trading. All right. What we have is... and which is Macy's, STX, and then MasterCard. All right, MasterCard for some strange reason. Let's open up. Oh, here we are, MasterCard right here. She starts off the year last year, 91.74. Goes up to like 96. Goes sideways for a couple of months. Then makes a low of the year at 86.59. That's back in July 5th. All right, after right after the 4th of July. So from July 5th, she goes from 85.59 all the way up to the high of the year, which was, I think, last week, 113. Nice move. Now she's settling at 111 at the moment. So where do we have MasterCard at? So we bought MasterCard 400 shares at 111.60. Is that right? We bought them at 111.60. That's funny. Okay, so we bought them at 111.60 and we're trying to sell them right here at 114.39. Okay, well, let's see what happens. We didn't get out the very same day. Nor do I. We bought them this morning. Yesterday morning. Okay. So we bought them yesterday morning. Okay. Yesterday morning, they opened up at 110.99. I got them at 111.60. Okay, made a high of 111.91. Huh. Okay. And today's high was 112.45. So I got quite a ways to go still. 114. Oh. Ooh. I think I might want to get out early on that one because 114.39 is going to be a new high. And I don't want to go after a new high. I want to get in and I want to get out. All right. Well, let's see what it does tomorrow. Because tomorrow we're going to do another live show right around 3:30 because I like to know exactly what's happening just before options close. And I'll check into this count also. Right now we're at 6.8. We made a huge drop. Look at this. For some strange reason, Macy's. Let's open up Macy's for a second and see what happened here. All right, Macy's started out the year last year at 43. She dropped from 43 all the way down to 30. And that took about a month and a half, which wasn't very good. From there, it was a slow climb back up to the 35 area. And then she gaps up and settles in right around 40, comes back down to the 35, 36 area, goes sideways for a couple of months. And then right at election time, she shoots on up to 45.08 and realizes that there is nothing in Donald Trump's agenda for us this year. And from the high of, 45.16, she drops within a month and a half period to 28.27, way down to that area. Goes sideways for a little bit to end up where we are today, 5 down days in a row. She's settling in at 28.27. Why is that? Okay, where are we with Macy's? We got 1,600 shares at 33.09. Now, we collected 1,600 dividends, which is nice, which I don't really even know what that is at this moment in time. But we did. We collected the 1,600 dividends. Now we can get rid of the stock for right about what we paid for it, 33.09. I'll be happy with that. So we'll put in our order for that tomorrow. We'll change that. And we'll see where we go from there. I might even, you know what? Let's quickly check and see what options. Yeah, but see, this is not my option trading account. So although I'd like to, I'm going to show it to you anyway because if you are trading an account like this is your own trading account, I'm going to give you a possibility of what you can do. Okay, so it's 1,600 shares. And the purchase price was 33. So let's use M. All right. Now Macy's does have weeklies. I don't think I have anything worth for tomorrow. No, nothing worth it for tomorrow. All right, next week. See if anything worth 33. The 33s and not worth anything. To buy them is going to cost you, well, it's really tough to tell now because of it's after hours. And when you're in the after hours, you're not going to get any halfway decent readings. Okay, so the only thing we have up here is, 4 cents for the 31s, and that's not worth it. Because you're so close to 28.27, and this thing has quite a bit of movement to it. So that's not even worth it at this moment. So April 33s are right there. The 31s are twice as much. Okay, so 1,600 times 8. I don't know how much that is. Let's open up a calculator and find out how much that's going to be. La 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 la. If you had 1,600 shares, you want to multiply it by 8 cents a share. This is what we could collect for selling the option. 128 bucks. I don't know. Maybe not worth selling it, because if it goes to that point, you might end up getting caught out of it, and that's not good. I'll leave my calculator open in case I need it. All right, let's just get out of the calculator. All right, here we go. All right, so if you own a stock and it has options against it, here's a way that you can sell some options in order to gain more return on your money. So as you can see, we got Macy's at 33.01, which is way up here somewhere. And that's a long way for it to come back. So while we're waiting for it to come back, we can sell options right here in the 31 area. 31, 32. See, the 31s right now are going for 8 cents a piece. The 32s going for 5 cents a piece. Okay, so 1,600 is a couple $100 we can gain while we're waiting for it to recover. So while we're waiting for it to recover, that's what we can do to gain a little bit more income. But we don't want to sell it for less than what we paid for it. So that way we're going to hold on to it for a little while longer. Just collect the dividend on it. Okay. STX, we'll be collecting the dividend on that one also. And what is STX looking like? The STX started the year at 35, 34.65, somewhere in that area. And she drops down within the next 2 months to make the low of the year at 18.28. Now from 18.28 back in May, she shoots up and takes her almost a whole 4 or 5 months just to get to the $37 level. Then from $37 level, she goes sideways for a bit, right up until the end of January. Then from the end of January, she jumps up from 37 up to 44. That's a $7 move, which is a very short period of time. And she's going sideways for a little bit. And right now, she's settled in at 45.13. STX, we collected the dividend on that one. Now we got it at 48.59, and right now she's at 45. So if we were going to trade some options on that, STX 48, they're worth 15 cents a piece. So 400 times 15 cents. It's a nice little. Okay. Did I put that calculator away? I did. Imagine that. Okay, so 400 shares multiply 14 cents. 56 bucks. So it's an extra 50 bucks. Big deal. Okay, but 50 bucks is 50 bucks. You know what I mean? Okay, we're going to quickly get out of here because we're not doing options. I would do these option trades here in this account, but this account is specifically for the dividends on steroids strategy. That's the only strategy we do on this one. So we are going to make a couple of changes tomorrow. I'm going to be showing that to you tomorrow on the 3 o'clock show, the 3:30 show. We're going to be getting rid of, not getting rid of, we're going to be changing. So rather than looking for the 2.5% from Macy's and from STX, we're just going to trade it for like a penny or 2 pennies above what we paid for it. Oh, look at that, it's 800 shares, not 400. Okay, my mistake. Anyway, that's what we're going to be doing with that account tomorrow. So stay tuned tomorrow at 3:30. We'll be showing you that. All right, well, let's take a look at our options. This is fun. This is where I'm making a lot of money this year. All right. Now, these are all the positions we got on this week. We only carried one over from last week, and that's TJX, because I explained to you last week that we sold too many of them, and then we ended up going short 100 shares. So we have to wait for TJX to go back down so we can buy it and get out of there. All right. Let's look at the first one. It's AEO. No, it's American Outfitters. American Outfitters started out. Oh, American Eagle Outfitters. Okay, started out the year at $16. Okay, she drops down in the next 2 months to in the middle of May to get the low of the year at $13.34. From there, she gaps up from $13.50 up to $15.80. Then it goes sideways for about a month and shoots up to make the high of the year right in August, the middle of August, to $19.46. $19.46, she goes sideways for a couple of months and then drops from December. She drops into a sideways channel the end of December all the way into the end of February. So that's like 2 months of going sideways. And she dropped down to where she is today at $13.85. So American Eagle Outfitters, that's the Harley Davidson stuff. I'm pretty sure that's what it is. I'm not 100% sure, but pretty sure. Okay, so AEO. Oh, we sold that one today. Yeah, there we go. We were looking to get in. We bought 2,000 shares. We made our target price, $14.06. And how long did we had it? We got the 20. I can't see the trades. Wow. Okay, so I can't tell when I bought it. Alrighty, whatever. Anyway, we're out of it today. We made the profit. We made that one on GPS also. So that's good. Yay. All right. So we made money on AEO and GPS. So let's jump on ATVI. See what they're doing. ATVI. Okay, ATVI starts the year at the low of the year, 32.17, and does nothing but go up. Well, it goes up sideways. You know, you got your up profit taken, up profit taken, up profit taken, up profit taken, up profit taken. You know, same thing. So she goes for the whole year right into October, the end of October, October 24th, to make a high for that section at 44.48. From there, she drops to the end of the year, makes a little sideways channel for about a month, right at the 36.37 area. And from there, she goes up a little bit to 40. And then from there, she gaps way up from 40 to 46. That's like a 12% increase within the next day. What causes the stock to go up 12% overnight? Anyway, she's gone sideways for the last 2 months to settle where she is now at 48.78. And where are we with our ATVI? Okay. Okay, ATVI we actually bought at 48.50, and we're looking to hit 49.53. Okay, so with ATVI we're up $259 already, which is nice. Okay, only up almost $100 for the day, but we're looking for that 49.53, which is really not that far away. I don't know. Maybe I'll jump out tomorrow, the market on closed, grab the profit, free up the money for next week, because we're tying up 22,000 into that one. Yeah, so we might want to do that. Okay, BMY. BMY looks like not the prettiest chart I've ever seen, but let's give it a try. She starts out the year at 62.90. Okay. From there, she takes 3-4 months, hits the high of the year at 77.05, sideways for a couple of weeks until she hits 75.16. Okay, right around August, the beginning of August, she drops from 75.16 to 61.69. Okay, that's like that's a 20% decrease. That's a pretty big decrease. Anyway. Okay, from there, slowly downturn to hit a low of 49.67. Went sideways for about a month until he ends up the year at 59. Makes a drop for the low of the year at 46.20. Back up to the $55 area where she settled in at 55.77. And where do we have BMY? We get the 55.5. the 56 calls right here. See 55.5, the 56 calls. So as long as it stays above 56, we're good. Okay, we made money on BMY. Thank you. All right, next one, CMCSA. Comcast. Everybody should know that one. CMCSA. Comcast. All right, so Comcast starts the year at the low at $29.51. Jumps up to the $31 area, goes sideways for about 2 months, jumps up to the $34 area, goes sideways for 1, 2, 3, 4, 5 months, makes a dip down to 30, right around election. Then right at the election, she goes from 30.17 to the high of the year, 38. It's like a 20% increase. 15% increase. Okay, and for the last 2 months, she's been going sideways, settling where she is today at 37.22. Let's give that a try. Where are we with Comcast? 37. Wow, that's an interesting strike. The 37.25. See that? 37.25 and then 37.50. That's only a 25% spread. I can only make 25 cents off this move. My goodness. All right, so she got to stay above 37.50. But guess what? If she's not above 37.50, I'm going to end up buying it for 37.50 because I don't mind owning Comcast 37.50. So let's hope tomorrow she stays above 37.50. Look at this. She has the high of the day yesterday at 37.48. That's very close to 37.50. So we'll keep an eye on that one tomorrow. So stay tuned tomorrow at 3:30 to see exactly how Comcast is playing out. Our GPS we already checked. MA MasterCard. Now we checked it on the other account. So let's see what it's doing over here because we don't know what position we're in here. Now MasterCard starts the year out, like I said a little earlier, at 91. Goes up for a month. Okay. 91, 92 goes up for a month, jumps into 96 range for about 2 months, then drops to the low of the year right around July 5th. Okay, 86, 81. Then from there, does nothing but go up right until where she is now at 111.60. Now I remember we bought shares on the other account at 111.60. And what position are we here with this one? We're looking at the 111, 112 put. Interesting. So I bought the 111 puts and I sold the 112 puts. So as long as this thing stays above 112, I make money. But hey, guess what? Don't mind owning it. I don't, because they have nice options with MasterCard. And coming into the dividend play, MasterCard usually always goes up. Just for the fun of it, let's see what MasterCard looks like on the yearly chart. No, that's wrong one. This one right here. Okay. We want to look at the seasonality for MasterCard. Here's where we are right now. Okay. So let's blow up this little spot right there. Okay, here's where we are right now. So we're looking at MasterCard. From right here, she's going to dip down a tiny bit. So I'm hoping this is not right for tomorrow because I don't want this thing to go up a little bit tomorrow before I'm stuck. And she goes nothing but sideways for about a month. Ugh. You like that word? Ugh. Okay, so let's cross our fingers for MasterCard for tomorrow. All right. Ba-ba-ba-bum. Who's next? Oh, let's get back to the regular chart. The standard chart. Here we are. All right, we should MasterCard now. We're going to jump onto Monsanto. We're in the money on Monsanto also. M-O-N. Okay, Monsanto starts out at 89.45. And within 2 weeks, she hits the low of 85.40. Now from there, it's a nice move from 85.40. Within the next 2 months, she hits 113. Okay, now that's a nice, like a 25% move just about. Okay, settles down into the trading range of 105, between 100 and 105 for a while. And right at the end of the year, she's at 105, and then from there to where we are now, she settled at 113. So let's take a look at our positions on Monsanto at 113. Okay, so 113, 114. So we're wanting Monsanto to end up above 114. Okay, above 114 would be good, would work very nicely for me. All right, but we're going to check that one again tomorrow because it's kind of close to where it is. Okay. And last we got, we're not going to do TJX. Well, let's see what TJX is at the moment just to find out. TJX again starts out around 77, stays in a trading range of 79 and 73 for about 6 months. Makes a low, come on, I hate when that happens. Makes a low of the year right around November 3rd. From there, again, going sideways for a while. She's stuck at the 78 area, and we're looking to get rid of it at somewhere around 75. Wow, it's going to be a long time before this thing drops down to 75. But hey, that's okay, because eventually she's going to. The last one we're going to look at is Verizon. It's the last option play we did. Now, Verizon starts the year at 53. Now, this thing looks like there's a lot of movement, but it's really not. It's going from 56 to 46. It's only a $10 move, 56 to 46. But there's a lot of trading opportunities here. She starts out the year at 52.90. Okay, jumps up to 54, drops down to 49, jumps up to 56, right, and drops all the way down from the low of the year. The high of the year was July 5th at 56. Then she goes from there within 4 months. She hits the low of 45, jumps back up to the 55 area, drops back down to the 48, 49 area, and she's settled right where she is now at 49.64, and that doesn't look good. That's 4 down days in a row, and we are 50. That's funny. We bought the 50 calls and we sold the 50 calls. So we get the difference between that little spread there. So we're not going to make money on this one unless she stays above $50.50, which is going to be a pretty big move because she's at 49.60 right now, and we need her to go up to 50.55. Wow. It's only 90 cents. That's really not that much. But 4 down days in a row, you never know. Because Verizon. Okay, so it would be nice if she doesn't, I will buy Verizon. I don't mind having 2,000 shares of Verizon. We will look at that tomorrow also. And let's look at the activity from today with the Market Watch. I'll get rid of the weeklies. Clear filter. Today is the 23rd. 14 companies. Okay, 14 companies. See if we heard of any of these. Let's go by a decent amount. There we go. Want to look at that one? No, we don't want to look at that one. Okay. Let's see how these performed. I usually just, let's just go and find out who we have. That wouldn't be right because that's looking for 2 weeks ahead time. We want to look at something that already happened, which would be today, getting out of this one today. This company right here. CM. Okay. CM starts the year right around 73, goes in a trading range between 73 and 81 for 3/4 of the year. She jumps right around election time from 73 to make the high of the year of 92, going sideways for a bit to settle up where she is now at 88.33. Okay, so today being the 23rd, 10 days ago today is the 9th, so we would have got in on the 8th. Okay, so 10 days prior on the 8th, see what we look like on the 8th. And that doesn't look good at all. Okay, so we're looking for a 96-cent move on the 8th. Okay, we got in, opened at 89.34, 89.65. That's like a 30-cent move. So that was a burn right there. But, you know, this is just from looking at it as is right now. We didn't plug it into the software to see it if it actually was going to be a good play. So let's quickly put CM into the software and see what that would have done. That one, no. Okay, CM, why not? CM, go. All right, well, letting you know right now, we probably wouldn't have done CM because look what we got here. Didn't get anything in 03, so that makes me a little uncomfortable because I don't like seeing zeros. Now the dividend is nice. It's a 92-cent dividend. It's a 4.4% yield. I don't like to try anything with less than 500,000 shares. I will do it if it has all ones, but as you can see, this doesn't. Okay, there's too many variables there. You got 2s, 9s, 0. I can say no thanks. And less than 500,000 shares. Well, but before I do that, let's just go to the other piece of software. And what were we looking at? We were looking at CM. Okay, CM, today's date is the 23rd. Plot the dividend. Okay, let's get out of here. Let's get rid of the average line. Okay, so 10 days ago, on average, when it went sideways and when it spiked up, it would have gotten out a day or two ahead of time. Okay, on average. And then she drops and then she shoots back up. Okay, so worst case scenario, if you did end up buying it, hold on to it and just let it ride out. So you figure, you know, a couple more weeks and you'll be able to get out for what you paid for it and collect the dividend. So that's not a bad thing. Where were we? Yeah, let's go back. See who's next. Okay, SGA. SGA. Okay, remember, now she starts out at 39, goes sideways for quite a bit of the year, right up to the election time. She jumps from 40 up to another sideways channel right around 49, 50 area. She settled in at 50, 60. Okay, that's where she is now. Looking for a 30-cent dividend. This is probably going to be a no-brainer one. Here we go. And we said it's looking at the 8th, right? 8th, right there. Okay. So the 8th, she opened up at 50.50, and she made a high of 50.90. So that's an 85-cent move for the first day. Okay, so had you got in on the first day at the opening, you would have been out the very same day. Okay, ADNT. ADNT starts the year out in a downtrend. Look at that. That doesn't look very happy. Right around 50, she makes a low about a month later to 40.38. From there, it's nothing but up all the way to the high of the year, which was last week, the 16th. Okay, settled into a nice little downtrend. Look at that, 5 days. 1, 2, 3, 4, 5 down days. I don't like that. I don't like that at all. Okay, so we're looking at a 27, a 28-cent move for ADNT on the 8th. Where is the 8th? 8th is right there. Don't even have to look at that one. The 8th is here. She opened up at 68.82, and she made the high of 69.38. So that's almost a 54-cent move. Okay, so made it doubled. Okay, so that's good. GSBC. GSBC starts the year out at 35, 36, goes sideways for quite a while, right into the middle of August. From August, She jumps up to another trading range of 40, 41, goes sideways to right till election time. Right around election, she goes from 40, 80, and jumps up to 55. That's what, a $15 move? That's crazy. $15, that's like a 30% move within that 1 month period. Okay, she's settling into a trading range here, where she is now at 49. Now we're looking at the 8th. Where is the 8th? The 6th, 7th, 8th. Wow, was the 8th a down day for everyone? My goodness. Okay, the 8th. We're looking for a 22-cent move. She opened up at 51.20. She had a high of 52.15, which is what, 85-cent move, somewhere in that area. That's a nice move. So yeah, you would have been in and out the same day of that one. TRNO. Okay, so TRNO starts the year at 22.83, goes sideways for about a month. From 23, she jumps up to a trading range of 27 and goes sideways for like 4 or 5 months. Right around election time, she jumps up to another trading range of 28. Sideways, drops down to another trading range of 27, which is where she is now, 27.65. TRNO, 20 cents on the 8th. Let's look at the 8th. Okay, on the 8th, we jump in at 27.07. Makes a high of 27.20, so only make a 13-cent move. So it didn't quite make it the first day, but on the second day, you definitely would be out. 27.28. Okay, third day would even got a little bit more. Okay, so it's basically showing you how it works. Now, this is just one of the tools that we use. To give you a couple of pointers of what we're looking at for tomorrow, let's take a look at a couple of them really quick for tomorrow. So today it's the 23rd, so tomorrow's the 24th, right? So we want to jump and look at companies for the 31st, which would be April 7th. Okay, so like 4 companies on April 7th. DG is going to be a good one. So look at TSE. See if we can put all these into the software and see what it says. So at TSE, DG, TSE, GD, CIO and ETH, CIO and ETH. Just gave you a quick idea of what we're looking at. Look at that, only one. So you get rid of this, too much data missing, too much data missing. Now ETH, I don't know if you want to do this, it's 7 years, can they hit 8? I don't know. This is going to be a tough call. We're going to say no right off the bat, but look, only 295,000 shares on average. That's a 30-day average, not the, the daily average, but 30-day average volume. 300,000 shares, no thanks, not enough. So we're looking at this company here. It closed at 189, the high of the year, 294, low of the year, 128. She's somewhere in that nice little range between the high and low. She's got a 1-year target of 203. I like that. It's got a dividend of 76 cents, which is not bad. Now, I usually don't like doing dividend plays less than 2%, but this one has some nice numbers. Okay, one's all across the board except for 2 spots in 08, which you can forgive 08 because that was the crapper of a year. In 2012, I don't know what that was, but I can forgive that one. Okay, so let's see what the charts look like on this. Now we're going to jump over to the Yahoo Finance chart, and we're going to look at what 10 years of data looks like for General Dynamics. Now, General Dynamics is a huge employer, and this is like almost a no-brainer just looking at this. This is awesome. Okay, we get start 10 years ago at $78. She goes sideways from 2007 all the way to, what is this, 2013. Then from 2013, she makes a nice climb to 189, where she is now. That's awesome. So it would be good to say, or good to assume, that the next 10 years will be just as nice. Not guaranteed, but it could be. So that's, gold star number 2. Let's get out of there. And let's see what General Dynamics looks like in here. Okay, we're putting General Dynamics, because it's the only one worth anything for tomorrow. General Dynamics, here we go. Okay, so General Dynamics started out the year last year right around 130. She goes up. Now, I'm just going to make assumptions here. This is not guaranteed. This is just going to be assumptions. She jumps up to 145 to get profit taken for a couple of months. And then she jumps up from 135 up to a trading range of 152, goes sideways for a while. Right around election time, old Dorney Boy gets elected, and General Dynamics is a, a defense contractor. They build chips. I guess she jumps from 152 at election time and goes all the way up to a trading range of 176. That's a nice move. She goes sideways for a couple of months. She jumps up again from 176 to trade in a range right around 189, which is where she is today. Now, this doesn't look bad at all. Okay, it goes sideways, goes up, take a little bit of profit taking. Look at this. Big drop. Down day yesterday and up day yesterday and up day today. This thing could be poised for, number one, the dividends coming up, so it looked good. Usually average in and out within a day. Awesome. I like that idea. Let's take a quick look at the seasonality chart. See what that looks like. Okay, so the seasonality chart for General Dynamics. It looks like buy it in January or buy it in January. A nice constant up movement for the whole year. That's lovely. Okay, here we are right here. So on average, this thing looks like she's going to continue to go sideways for at least a couple more weeks. Okay, so if she's going to go sideways for a couple of weeks, then I want to do some spread trading. Okay, so we want to look at General Dynamics. Here we go. Okay, so General Dynamics only has monthly options. Yuck. And what's worse, I can't do any plays tonight, although I'd love to I'm going to show you what I would do, but I can't do it only because I don't know what the numbers are going to look like. Got the bid of 100 and the ask of 215. Talk about a big spread. That's a $115 spread between the bid and the ask. That's crazy. All right. Let's go back to standard chart. Okay, here's where she is now, 189. This is the closest option I have right here. This is for 30 days. 189. So you know what? That's a $5 move, $5 spread. For 30, that's a $70. That's a 70-cent or 69-cent spread on the profit. So if I pay 431, I'm looking to sink in $4,300. I only get $700 in return. That's 15%, and that's for 30 days. Oh no, thank you. I know, 15% for 30 days. I'm saying no, thank you. All right, let's cancel that one. That thing all it has to do is go. It can go up, down, or sideways. All right, let's bring that one back up again so I can explain it to you. Okay, the 180, 185. Okay, I'm going to back this up a little bit so you can get some idea. Okay, let's go right here. 180 is way down here. 185 is way up here. We're talking about 15% return, roughly, not exactly, but roughly around 15% return for 30 days for doing this one call spread right here. Now, the stock can go up, and I'll make my 15%. The stock can go down, I'll make my 15%. Wait a minute. The stock can go up, I'll make my 15%. The stock can go sideways, which means, just going sideways. I'll make my 15%. and the stock can drop all the way down to 85.01, and I will still make my 15%. But if it goes below 85, then I have to keep an eye on it, and I have to make sure it stays above 80, I don't know, 85, 84, 50, something like that. I'm not 100% sure exactly where it is. But do you see what I'm saying? A 15% return, most people don't get that in a year. But this, you can get it in 30 days. Can you imagine that? 15% in 30 days. By buying this spread, the 180, 185 for General Dynamics, which has a bunch of things going for it. The software says it's going to go up in the next 30 days. The seasonality says it's going to go sideways and a little bit up for the next 30 days. Because that's what we're only concentrating on the next 30 days. Okay, I'm going to show you in a minute the next option out, which will be the May option. Okay, and I'll give you a little rundown on those too, but that's a little bit further out. But we're just talking about the closest one available. The closest one available is the next 30 days, which is the third Friday of next month. Now, we have the opportunity to make a 15% return for one day. So can you imagine making a 15% return every month? And here, I don't want to do this trade because I don't have to wait 30 days. I'd like to get 15% for a week, but there's no weekly options on General Dynamics. Okay, so make a long story short, General Dynamics is a good company. They got dividend coming up. They score very high on the dividend capturing calculators. I showed you that. Let's take a look at one more. I don't know if I showed it to you or not. I'm pretty sure that I did. No, I didn't. Here we go. General Dynamics, and their option is 7th. So let's plot the dividend. There we go. Let's get rid of the average. All right. What this is basically saying, the dividend is coming up in 2 weeks. Is this a good play for dividend capturing? Oh, it could be. You know, you're looking at average of 2 days, holding it for 2 days. You know, if you're getting tomorrow, or better yet, Monday, that'd be 9 days, or even 8. Okay? By just looking at this chart, okay, anything to the left of these red dots represents days before the EX date. Okay, so tomorrow's Friday. 10 days from tomorrow, they're going to have their EX date, which is the last day the stock trades before you qualify to capture the dividend. So you might want to wait by looking at this chart Tuesday, okay, Monday or Tuesday, to buy General Dynamics, because then you got a couple of days and you might be able to make your target, jump in, jump out. And if not, you're going to have to hold it for a couple of weeks after the dividend paid out. So you collect the dividend, wait a couple of weeks, she goes back up, which is not bad, but that's not what we want to do in this instance. That's for those of you who want to just buy the stock, collect the dividend. Hey, great, wait till Monday or Tuesday. That's all I'm saying. I'm not telling you, let me say that again, I'm not telling you. I'm just showing you what the software says. Software says, hey, my best choice is wait till Monday or Tuesday. Okay, let's get back to the chart, what we're looking at. Okay, so here's where it is now. It made this nice little upswing, a nice, strong, steady sideways trend. She drops down to 189 where it is now. Now we're talking about a 180, 185 call debit spread. That means I'm betting that this thing is going to stay above 185 come time of expiration, which is 29 days from today. Okay, and for that, I can collect a whopping 15% return on my money. But that's all I can collect. No matter what the stock does, I can only collect that amount of money. Let's go back here and show you what I mean. Okay, so it would cost me $4,325 to do that one trade. The maximum amount I can make is $690. That's right around a 15% profit. So as long as the stock stays above 185, then I made money. That's it. Oh, actually 184.31 is the break even. Okay, so as long as she stays above 184.31, which is right about here. That's my window of opportunity between 184.31 and where it is right now. So as long as the stock stays above that, I make money. If she stays above 185, that's a 15% return. But that's the most I can make, is 15%. Not bad if you don't mind making 15% on that one play. Just ignore it and just see what it does. Do I want to do that? No, sorry. I do weekly options in this account. That one doesn't give me enough of a return. Okay, that's that one for the next option coming out. Now, for those of you who want a little bit more protection, let's get rid of that one. And look at that. That is the May. That's the third Friday in May, which is 57 days away. That's 2 months. And if we look at the exact same play, the 180, 185, okay, she's down to 357. Okay, that's 357 for the options. Okay, now it's costing me $3,585. The most I can make is $1,430. Okay, now that is right around 44%. Okay, however, you got to divide that up in how many weeks that is. 44%. That's 2 months. So that's like 22% per month, as long as the stock stays above 183.57. That's break even. If it goes below 183.57, then you start losing money. But look at where she is. She's at 189. She got the dividend coming up, and all the indicators saying, "Hey, yay, this is going to go up." Am I telling you to get it? No, I'm not telling you to get it. I'm just showing you what the software and what it's done in the past, what the indicators are telling me. Okay, would I do it? No, I don't want 22% per week. I mean per month. I want to do my 22 to 40% per week, which is what I've been averaging. All right, so that's a nice play. General Dynamics is a good company, nice dividend. Get in, hold on to it if you want, collect the premiums, and look at the options that you have. Look at the possibilities you can work with. All right, right here's a good play. General Dynamics. As long as she stays, in this example, as long as she stays above 185 for the next 2 months, you can make 22% per month, which is not bad. Okay, do that a couple of times a year and you're beating everyone's odds, everyone else's averages. Okay, I'm going to check and see if we have any questions. Getting out of this one, like I said, I'm not going to do this because it's not enough money for me. It's not greedy. That's terrible. All right, so do we have any questions? No, I don't know. No questions. Outstanding. So I can jump on out of here. And let's see what we're looking at. Okay, so let's just jump on out of here. This is James from Dividend Stock Talk. And hopefully we will catch you tomorrow. Remember, tomorrow at 3:30, we're actually going to do some live trading and cash out some of our close out some of our positions and change some of our positions that we have on from Monday. And we're hoping to make a halfway decent return this week. As long as I hit more than 1% a week, I'm a happy camper. 2% is great, makes me happier, but I've been averaging right around 2.5 to 3% per week, which is not bad. 9:53, right? 9:53, Thursday, March 23rd, 2017. We will catch you guys later, and hopefully see you tomorrow morning, tomorrow at 3:30. So we are done.